Ouch! I'm sure that's what a lot of people are saying right now when they looked at their crypto portfolios this week. Don't worry, I said it too. Bearish downtrends are never a fun time in the markets, but with our channel, we will try to keep the laughs coming, making you feel like Goldilocks in an empty house. The bears might be knocking, but we won't let them in, because it's time for Chico Crypto. I could talk about what every YouTuber is posting about either yesterday or today, the pesky Bitcoin options, which is looking to push the price towards max pain. What does this mean? Well, a record 6 billion of those bad boy options are set to expire today, and the FUD of a drop to the max pain point 44K was everywhere. So I'm not going to repeat that. Go watch the YouTubers who repeat each other in a circle daily. I'm going to repeat the bullish stuff that no one is really covering when they should be. Elon Musk, he came out of the woodwork once again and tweeted not about Bitcoin, but about DeFi. He said, "Don't defy DeFi." And the Ethereum crowd goes wild. Well, I'm going wild because if he's tweeting about DeFi, decentralized finance, he's tweeting about Ethereum, the home to the DeFi kingdom. And that's a stark contrast to what he tweeted about the day before, all about BTC, accepting it for Teslas, and even going all in by running full nodes and holding the BTC they received. And now, the next day, it's all about DeFi, which as we know, Bitcoin does not have. What the freak is going on? Well, you should know Elon has had his eyes on Ethereum before this. Nearly 2 years ago now, Elon out of the blue tweeted Ethereum in April of 2019, and then followed it up with some very telling words. What should be developed on Ethereum? Well, he's had 2 years to think about it. What should be developed on Ethereum? And Chico thinks he's developing Ethereum on top of Bitcoin for Tesla and possibly beyond. Let me try and explain the first piece. But to get this, I've said it before, DeFi, decentralized finance, it's on Ethereum. You have the perfect system for the future of finance. Wallets, DEXs, other financial services can be plugged in and out of each other easily, thus shaped together to create new infrastructures and new monetary and payment systems. Ethereum is always considered the base Lego block, the base layer that hosts the ever-growing number of these pluggable DeFi services or applications. And yes, Ethereum can be considered the base layer of DeFi, but that doesn't mean it can't be layered on top of Bitcoin to bring that DeFi, its services and applications to the Bitcoin asset. Which is already happening if you know where to look. Dune Analytics tracks the number of Bitcoin on Ethereum. And as we can see, since you were able to do it last year, May of 2020, the number of BTC that have Ethereum layered on top of it has surged month after month. And as of today is nearly 183,000 BTC, or pushing towards 1% of the supply in under a year. I'm showing you this to get it through your heads. Ethereum is becoming BTC's DeFi layer, and it's only going to accelerate as DeFi grows and allows you to do more with that BTC, which leads me into what I think Elon is planning. Besides cars, Tesla's other significant business is Tesla Energy. This side of the business involves solar panels, solar roofs, and batteries. On the consumer side, the batteries are used in their vehicles, and also they allow for power storage for their residential solar systems, solar panels and solar roofs, and they are sold as Tesla Powerwalls. Instead of in your car, the battery pack is in your home. In most states where residential solar is installed, surplus energy from the arrays can be fed back into the grid, where the local power company will net meter or prorate the customer's electric bill based on what they generate into or draw from the system, which is a nice thing, but let me tell you, it's the energy companies making bank on the solar people's backs. The prorate people get is terrible, and they could be making so much more if they were allowed to. And here's where the batteries come into play. Powerwalls and possibly eventually your Tesla can store that surplus energy from your solar assets and power all the things in your home. But once they are full, you gotta start selling back to the grid. Or do you? Going back to Elon's acceptance of BTC tweet for Tesla vehicles, he leaked something when he spoke of them running their own nodes. He said internal software, like Tesla is working on creating something themselves, the engineering team. Tesla has vast resources in the R&D department, spending nearly $1.5 billion on it in 2020, which is nearly double of what they spent in 2016. They have grown this engineering power over the years, which has allowed things like the solar inverter to take shape. From Tesla's website on the inverter, they say, the Tesla solar inverter completes the Tesla home solar system. Once installed, homeowners use the Tesla app to manage their solar system and monitor energy consumption, resulting in a truly unique ecosystem experience. And the key features we need to focus on: Wi-Fi, Ethernet, and cellular connectivity with over-the-air updates. Why is that important? Well, the inverter, Wi-Fi, and cellular connectivity position the solar system to be easily attached to a cryptocurrency network, and the Tesla app is ready to be integrated or turned into a crypto management tool that is easy for consumers. So, just spill the beans, Chico. What is Elon going to do? Well, he's going to decarbonize BTC by a distributed network of solar assets. He is going to lower the cost of these assets, vehicles, solar system batteries, by allowing consumers to use their energy and point it towards the Bitcoin network. The next question I'm sure you're asking yourself is how? But before we get into that, it's time for a sponsored segment of this video, supported by our friends at the Circuits of Value, CoVal. And like always, the full details of our agreement can be found in the description. Cross chains and NFTs, does that sound like something you're interested in? Well, CoVal takes that one step further with their concept of Emblem Vaults. Their protocol allows the ability to take different blockchain tokens and put them into a single token, basically creating a token that is a multi-asset crypto wallet in itself. And the vault is created as a custom ERC-721 asset, an NFT, a multi-asset NFT wallet of sorts. So assets from what blockchains? Well, Emblem Vaults can accept assets from, of course, Ethereum, but also Bitcoin, XDAI, Polygon, BSC, and even Phantom. So 6 blockchains right now, and of course the vault lives across them. So what does this mean and what does it do for the crypto ecosystem? Well, let's look into some of the use cases. For one, you can create value-backed digital art with a vault that contains one or more pieces of collectible NFTs along with some Bitcoin. You can create tradable portfolios too. It's possible to combine multiple assets into a single token, 40% BTC, 20% ETH, 10% Link, 10% Ample, and so on. Thus, the entire portfolio can be traded as just one token. It's also possible to create portable liquidity pools. You can create an Emblem Vault with multiple pool tokens to make transferable liquidity pools, Balancer, Uniswap, and more. And also transparent funds, because you can create an Emblem Vault that is held by the community or other trusted third parties that multiple people can deposit to with trust. Going to their website and into the application, we can see some of their featured Emblem Vaults, live and ready to go. Some based on NFT art, some based on crypto assets, like the Money Printing Vault, which shows off the cross-chain capabilities. It holds both Ethereum and BTC assets. Or even my own Chico Crypto Emblem Vault, which can be seen and viewed on OpenSea since it's an NFT. It also contains assets from the Bitcoin and Ethereum blockchains. Now, how does this work? Well, a high-level overview goes like this. The Emblem Vault tokenizes a Bitcoin or Ethereum virtual machine addresses within itself, and the private keys for the assets are encrypted and split between the NFT and Google HSM Cloud. The creator does not get access to them, and according to their roadmap, they are getting ready for key storage to move to the secret network for even more security soon. But this enables you to swap the ownership of those addresses since the NFT is the owner of them. The only way to get them out is to destroy the NFT, which whoever holds NFT can do. And this allows other use cases like the vaults holding other things, hidden data, vaults within vaults, and NFTs for NFTs, and so much more. So if any of this fits your NFT fancy, links for everything are below. Now back to Elon and how he could be changing the crypto game with Tesla Energy. So instead of consumers with their saved power in the batteries being forced to sell that back to the power companies, they could sell that power to Bitcoin miners. The miners that pledge a sustainable goal. Why do you think it's such a hot topic here recently? Cleaning up BTC mining. It's not just a coincidence. Cointelegraph spoke of it in December of last year, only a couple months ago. Bitcoin mining, the next decade of sustainable crypto innovation, begins today, right around Elon's buy. And then just 2 weeks ago, Business Insider posted this article. Bitcoin mining can be a bridge to a renewable energy future by supporting green projects, a leading North American miner says. Who was that Bitcoin mining player? From the article, it says Foundry, a sister company of the major Bitcoin player Grayscale. And then according to the block, they have been in stealth mode, just coming out of private beta a couple weeks ago too. So why is this Foundry, new and major North American Bitcoin miner who is a sister company to the largest institutional player Grayscale and DGC, important? Well, let's just rewind to when Elon got swooned by Saylor. Micheal Saylor tweeted about Elon buying a large amount of BTC. He said he purchased over 1.3 billion of it and would love to share his playbook with Elon in response to him asking if large billion-dollar transactions were possible. This was December 20th, 2020. Well, less than 2 months later, in February, Elon purchased not 1.3 billion, but 1.5 billion. He must have taken some tips from Micheal's buying strategy. What is Micheal's buying strategy? Through whom? Well, Micheal leaked his strategy in October of 2020, months before he told Elon. He said, institutional support for Bitcoin continues to build, with Grayscale leading the way. The same Grayscale tied to Foundry, who is talking about sustainable Bitcoin mining. You see it? 'Cause I do. If you don't, you're just confused even more, and you're like, what about Ethereum? Keep watching. I'll clear it up soon. Cheers. I'll see you next time.